$76,963 and $76,638. This is our resistance zone for Q3 that I talked about in the Q3 update. If you have not watched the Q3 update, you should do so. I published this analysis about what would likely happen in Q3 in June, end of June. And the idea was, first of all, we likely go up in a wave 2 bounce, should reach the red resistance zone, should ideally not break above 76,638. And August and September should be bearish. That was based on seasonalities. Of course, I couldn't tell you in June how far advanced will this bounce be. End of July, you know. And so what we have seen from the July low actually is a 5-wave move up. And because we've seen a 5-wave move up, the market can extend this bounce. Because a corrective bounce is a 3-wave move. That's exactly what we saw here, for example, after the February lows. But you can see that this 3-wave move formed first. And it just extended into a larger 3-wave move then, right? And this is something I'm considering right now, that this here could turn into a larger 3-wave move. Because the first move up was probably 5, as far as I can see, which again is an indication that the market is trying to at least form a more meaningful low, at least as part of a larger bounce. What it gives us is, it's not a crystal ball, but at least it gives us a key support zone to watch. So the zone to watch to keep this upside bounce attempt alive is between 59,317 and 62,436. Just reading it out because some of you might not see it if you're using a phone or the screen is small, but it gives you the key levels here. And there are 2 pathways that the market could still take for higher prices. And again, don't misunderstand me. I'm not saying that this is a rally to new all-time highs, that the bear market is over or anything. I treat this as a corrective bounce. So any upside in a bear market in this wave 2 is nice to have. Yeah, the market doesn't have to do it. When a bear market, the main trend is down, guys. That's the thing. The main trend remains down. However, there are 2 pathways, as I said, that the market could use to still go higher, 2 patterns. That's what we're doing here. We're taking a look at Elliott wave patterns. The first one is on the chart. A wave, B wave, C wave. That is exactly the 3-wave move to the upside that I just referred to, a corrective bounce, in which the C wave could have started in August, and the C wave is always 5 waves. So the main question is it actually a C wave? If it is, we must hold the August low. And I'll show you on the smaller time frame why, but you can already keep that in mind. Now, okay, if we go lower and the August low breaks, is it all, you know, are we already continuing the bear market basically, right? That's the question. Are we already in the next move down? And look, I wouldn't have a problem with that. I'm always for the direct path. You know, I hate these ranges. Bitcoin is actually, you could say, Bitcoin has been in a range nearly all year. Okay, I mean, this is the June low, but from the June low we just moved sideways. If we zoom out from the February low, we just moved sideways essentially. I mean, yeah, it moved up and moved down, but essentially it's a large range. And I'm all up for the direct path down. At least we would get this done, but it might not be that easy. The other pathway might be, you know, let's first trap the bulls and then the bears. That's what the market likes to do. What could be is that this B wave is simply extending a little bit. And that's why this support area is on the chart. So the daily chart doesn't ask a question, oh, you know, are we already in the C wave? Do we go a little lower and then up? It's this zone that matters. 59,317 to $62,436. Against this, we could push higher. So the smaller time frame then will reveal what the levels are that need to hold to keep this idea alive that we might have already started the C wave up. Yeah, but these are the 2 pathways. Only really below 59,317, these 2 patterns become less likely. And it becomes clearer that the market is likely on its way to 56K and then possibly even 44K, maybe even 39, but that will probably take a while. Please keep in mind that this whole area around 56K is likely very strong support. You know, look at this. The price spent a lot of time there in 2024. It is the first level of our main Fibonacci support zone. So I treat this as area with very, very strong support. I would say now what we're going to do to clarify, I'm just gonna say 2 more sentences to clarify everything. Then we go to the smaller time frame and we're going to zoom in into this zone. And you'll see some additional levels, patterns on the micro level, because that's how Elliott wave works. Huh? The C wave has 5 waves, so we want to see how they are unfolding. And if the C wave isn't starting, then how does the B wave extend? And that's the thesis, we are in a bear market. Price will likely stay in this bear market until autumn, but we could be in a corrective bounce within the bear market. And this has a lot of room still to extend higher. The resistance area can be used. And so this is why it's so exciting, because we're currently at a point where the market could start the next bounce higher exactly now, and I'll show you why on the smaller time frame. Before we continue, a brief note regarding our partnership with Bybit. Bybit is currently running a limited promotion for the MCO community. New users, as well as existing users who have not yet made their first deposit, can receive $25 worth of Bitcoin after depositing at least $100 within 30 days. The number of rewards is limited and they are allocated on a first-come, first-served basis. If this is relevant to you, the dedicated campaign link and full terms are available below the video. Now back to the analysis. So, and this is now the interesting spot here on the smaller time frame. I shared it already earlier today in the member video that we would likely see another low today. That was ideal, and this is textbook behavior of a corrective bounce that the market showed us from the Monday low. So what happened this week? This week, first of all, we started the correction. Yeah, we're here on the 30-minute chart, by the way. We started the correction, which could be a wave 2. I already just said on the larger time frame, this pullback could be wave 2 of the C wave to the upside. And this wave 2 should be a 3-wave move. I can identify 3 waves now. Earlier today, yeah, the price bounced into resistance, just micro resistance for a wave 4 in the C wave down. Remember what I said? A C wave is always 5 waves. So we had here a wave 1, wave 2, wave 3, wave 4, wave 5. And that wave 4 high formed today in the resistance zone between 64,090 and 64,473. Again, that was micro resistance for a wave 4. And the idea was, as long as the bounce is only a 3-wave move and we stay within resistance or below resistance, another low is preferred. That happened. And this is always a good educational moment. For me to assume a low is in, I need to see a 5-wave move up above resistance. Now, if at this point now we see 5 waves up, that would be our first indication this wave 2 pullback is complete. I'm going to remove that resistance area. We don't need it anymore. But yeah, basically what we want to see now is a break above 64,430. But any 5-wave move up now would help us to determine that likely wave 2 has bottomed. The wave 2 is still in the standard support zone, which is here micro support between 62,900 and 63,813. That's micro support. The formal invalidation point for the wave 2 is the swing low that formed on the 1st of August, and that is at $62,225. So that's the invalidation point, because there's a rule that says a wave 2 pullback cannot go below the beginning of the wave 1. Because if it does, there's no progress to the upside, right? It makes sense. It actually makes sense. Now, I would already, what's the difference between support and invalidation then? Well, below 62,900, it will become more likely that that this is not a wave 2, right? Because then support breaks. But technically, the wave 2 pullback is valid as assumption until we break below the August low. Below the August low then, and this is what I explained to you on the larger time frame, the B wave could extend. The B wave that in the orange count presumably bottomed on the 1st of August, it could simply extend. And that's the white count here. And we would likely see the lower support area then tested. Now, I already mentioned what the first resistance is. If that one breaks, so if the price can now break above 64,450, then the door opens to a test of the Sunday high, which formed at $65,460. It's a key spot now because we have a complete looking 3-wave decline, but there is no confirmation of a low yet. So this is, again, not a crystal ball, but it's a decision moment. So again, that basically gives you all the information about Bitcoin. I hope it was helpful. If you're interested in additional updates, I recommend that you check out our X channel. Here you can follow us. Of course, it's for free, and you can get a lot of additional updates. The Q&T was posted today. We posted Bitcoin updates.